Trading is closed on March 31st, 2022. We always start with our disclaimer. It's my trading plan for tomorrow, April the 1st. Remember, it's a plan. I can be wrong, and any trade you make should be at your own risk. Couldn't really come up with a call for today. We did say it was the pattern with the early low, which is this. And tomorrow's pattern also has the early low. I said that weakness with this pattern yesterday tends to lead to more weakness, but you couldn't guarantee a lower close. And that conflicted with some optional MEJT targets. They don't have to print, but they usually do. Since they didn't, we'll forget them. But I couldn't figure out which of those things was going to happen, so I didn't make a call. People who look at the calendar always look forward to April. That's one of the strongest months historically for stocks. So let's see what this April might hold in store for us. During the day, MEJT gave an ultimate buy signal, an optional lower target as well. Here's the buy. We got the lower targets, obviously. We had an ultimate buy signal here according to the criteria in the book. Again, like when I say things like gap up strongly or something, I can't tell that a computer, and I had to make specific numbers for what strongly and weakly means for a computer. When I had the program, this didn't quite meet the criteria, but if you just read the book I wrote, that it's a clear ultimate buy, which is played out. It also gave us a lower target, which we've seen, and these moves were said to retrace. This was DeMark's TD T-line, 45.26.33, resistance over the line. We've now dropped to that line. In addition to the fib support we showed, 78.6, this line is now support. It doesn't have to stop right at the line, but it's support. This is my modification of Vets and Gould's technique. You take this high, this low, divide this thing into eighths starting from here. See how you get nice support resistance area, and you'll see we drop right to support 2. None of this means support has to hold, but usually if it's not going to hold, you're going to gap under that line. This is how I'm counting this. I have this as a 1 and this as a 2. I have this in the third wave. I don't count it as complete. And if I'm right about this, I expect this to take out the old high. If I'm wrong, it should be obvious soon enough. Let's look at this wave here. Well, there's no one right way to count this, and I'm not claiming this is the only way, but it's a way. You can count this as wave 1, you can count this as 2, and I'm having us in a third wave higher. It's been pretty strong characteristics of the third wave. Now you can count this as 1, and you've got fibs counting this as 2, with A and C having good fib ratios. Doesn't mean it's right, but if it's right, we're going to start a wave 3 of multiple degree, which is the strongest wave of them all. So if it's right, we should find out soon enough. We should move up sharply right from the open tomorrow and have an unbelievably strong rally. If that doesn't happen, probably some other count's going to be the right one. This is a wall into the close, tends to represent panic selling. We also have a Hobson close, which is a close at the exact low print of the day. If it isn't a new all-time low, or at least a low of the leg, and you close at the low print of the day, very good likelihood of gapping up, and probably gapping up sharply tomorrow. Now this can all be changed by the employment report. I have no idea what that's going to say, and anyone who positions himself before the report is likely to get a very big grin in his face or a very big smile, because it's pretty tough to predict. But if this is a drop to support and support holds, and if we gap up, the count I have makes it plausible that we're starting a wave 3 up of multiple degree in April, which historically is one of the market's strongest months. Friday's pattern has the early low. It could gap up. Typically it's a rally day, high in the final hour. If it isn't a rally day, if it's weak instead, tend to see more weakness in the days to come. Monthly employment report comes out tomorrow, can influence price action strongly, render nugatory any technical analysis, including this one, which comes out before it is released. Today's late collapse formed a wall into the close. Close was the low print of the day. Often these indicate panic selling by retail customers, and if so, we should gap up smartly tomorrow, reverse the late drop, and likely rally all day long. Now we should know before the open if that's going to happen. And if we don't gap up smartly, I'm just not going to make a call. And if we do, there should be plenty of time to jump on the train. Longer term, I think this is the early stages of a strong move higher. I think it's difficult for me to see prices entering a prolonged decline after seeing such a major increase in the market breadth. Now, I don't know how I'll open tomorrow, but if we gap up smartly, it could be the start of something very major on the upside, lasting quite a long time, with a third wave up of multiple degree. And until we know that's what's going on, we don't have to bet the house on it. So tomorrow has the early low. Typically it closes near the high of the day. I think we'll know early on if that's what's going to happen. And that's today's call.